So, Mark, we haven't talked Fed in a while, and there was just a Fed meeting. A lot of people were anticipating that maybe we would get a rate cut, and Jerome Powell squashed that once again. What are your thoughts? What's going on here?
Well, I mean, it sounded to me like they spent too much money building the building. They cannot drop rates at all.
They're over budget.
Yeah, exactly.
They're $4 million over budget.
Right. And I mean, there was a meme circulating with those two kung fu fighting. Chairman Powell and Trump, and it's fun to watch, right? Yeah. But there is not. We haven't had a Fed rate drop in a long time.
Yeah.
And it kind of is related. We all know. The federal funds rate is overnight lending between banks, not mortgage rates. Two totally different things.
Right.
And so you're talking about overnight versus 30 years. Big difference. So the point is that that it is influencing mortgage rates, but it's not directly tied. Yeah. But this year, I mean, we've had maybe a 0.5 point spread, a range of rates.
In mortgage rates, yeah.
Yeah, it's, 6%, 6.5%, or, whatever. And that's it. And they haven't moved a bunch.
Yeah.
That's not hundreds of dollars a month on your mortgage payment, unless you're buying a pretty big house.
Yeah. One thing that was interesting that I saw is that at this particular Fed meeting, there were 2 dissenting votes from Powell, which I guess is not a common thing to see at a Federal Reserve meeting.
There's certainly been rumblings that some of the other Fed presidents don't really agree that we should just be keeping them, keeping them the way they are. But usually they kind of fall in line, Yeah. But 2 of them were quite vocal that nope, we don't agree. And then as we've talked about this before, there is on Fed Day, because that's what we call it, Fed Day.
Yeah.
It's like,
it's like Christmas morning.
It's like in the mortgage
business. Are we getting coal in the stocking, or are we getting some presents under the tree,
What's going to happen today? You have the announcement, which, we're Central Time, so that's 1 o'clock our time.
Yep.
And then after that, they give you kind of the announcement, written announcement, and then, everybody analyzes what changed in their wording and all that. And then Powell comes out and gives a news conference, and answers questions, makes comments, and that often is what makes a difference.
Yeah.
In the markets. And the markets were disappointed in some of his comments. We may not, we got 3 more Fed meetings in 25. And a lot of people have said, we're going to get 2 rate cuts. And his words were something to the effect of, we're not going to get as many as some people would like.
Which is generally 2 is what most people are thinking.
Yeah. So a lot of them are thinking 2, he's thinking 1, and it is what we kind of read between the lines and assume that's what he's saying.
Yeah.
Now I will give, Chairman Powell, no matter whether you like the guy or not, I will give him credit for sticking to his guns on their mission. Like he's not wavering. He's not being influenced by anybody, even if it's Donald Trump. Like he's not wavering. And I respect that.
Yeah.
But there's a lot of people that are saying, come on. Like, it's
about time.
Yeah.
Well, they have the dual mandate, right? So it's like Fed, there's a lot of things that Jerome Powell and the Fed does, the Fed presidents. But if you want to really simplify it and talk about what is his job, it's keeping the jobs market stable and keeping inflation down at the same time. And it's like a tightrope act to some degree.
2% inflation target, and then keeping the jobs, maximum or minimum unemployment, maximum employment.
Right. So you would think like good jobs reports, meaning like we've increased jobs in the United States, would mean, oh, that's great. Like we can actually lower rates now. Things are going good. But that's kind of counterintuitive, right? Because like a good jobs report actually means we might hold rates where they are because the jobs market isn't breaking at the current rate.
Right.
But what's interesting to me is the numbers you shared before we started recording, which is that they said that 147,000 jobs were added, but then the Fed made their decision to hold. And then shortly thereafter, it came out that actually they revised it. Only 14,000 jobs were added. So they reduced the amount of total jobs added by 133,000. And I think a lot of people are upset about that. They're like, well, hey, if the true numbers were out, maybe the Fed would have done something different, which is interesting in the fact to me, because immediately after the meeting, there was a 37% chance that the Fed's going to reduce rates in September. When the revised jobs report came out, now they're saying there's an 87% chance we get reduction
a
in
reduction
September.
next time.
Yeah.
Yeah. And there's a lot going on here. I mean, we've got, you've got Powell saying things like, well, if it weren't for the tariffs, we would already have dropped rates, or
Right.
we would be dropping rates right now. And he believes that the tariffs will actually increase inflation because of the extra cost of the products, right? And that hasn't happened.
Right.
But he's scared it will. And so we think a lot of that is, his decisions have been driven by that. And then, but there's definitely a camp out there, Fed day was Wednesday. Friday morning, we come up with these job revisions.
Yeah.
And like, we're not just off, we're like way off.
Yeah.
And we haven't heard, these are non-farm payrolls, BLS, Bureau of Labor Statistics, that's what they do. And they've been wrong before, but they're usually not this wrong.
Yeah, it's not
And
like we
so,
added 147,000 jobs. Just kidding. We almost didn't add any.
Yeah. And so the problem really is that, all right, had that information come out before, and nobody was holding it, it was coming out when it's scheduled to come out. It is what it is, right? Fed day is what it is. And so, but had that information come before the Fed meeting, would we have lower rates now?
Yeah.
A lot of people are saying yes.
I think the indicator is the increase in the likelihood of the drop in September based on that. Yeah. Are you thinking that we might see a quarter point in September?
I really am. Honestly, I went into this one thinking we would see a quarter point. Like he would give a little bit, not Trump style, not 3 points or anything crazy. But
Trump did say we need to cut 3 points right away, didn't he?
It's not basketball. We're not shooting for a 3-pointer here. That would really mess with the economy. But a quarter point, and maybe another one this year would be good.
So a total of a half a point drop in 2025.
Total of a half a point. And we've talked about this before. It doesn't mean the rates are going to drop a half a point on mortgages and instantly or anything like that.
Yeah.
Rates always elevator up, stairs down. They're going to, the investors are going to be careful before they, drop the rates because, if it takes a sudden turn the other direction, they're left holding the bag.
Yeah.
So, they want to make sure that's not the case. But we've each kind of got our rate that we think is the trigger.
Yeah.
Like, when does everybody and his brother go out and buy a house? And we had this happen last year. Kind of tail end of 24, we had some low rates. FHA dipped below 5 or below 6. I'm sorry, and we saw a flurry of activity.
Yeah.
It wasn't COVID style. It was instead, COVID style was 20 people making an offer on the same house. This is more like 5.
Yeah.
And so I believe at least, and many believe that, except apparently you, that, just gonna throw that in there.
I may have revised, I want to hear what you say, but I may have revised my opinion since the last time we talked about this.
FHA is like 6.25 right now.
Yeah.
Like when that gets to 6 or below, that's when we feel like we're going to see a flurry of activity. Got a lot of houses sitting on the market right now.
Yeah.
I ran across one that's been on the market for 179 days.
Oh yeah, I'm seeing that a lot these days.
What is going on with that? So, but anyway, so what's your take? What do you think is the trigger now?
Yeah, I think something in the 5s. I mean, I know I said something in the 4s, but I was still kind of living vicariously through COVID times.
Okay,
but not COVID specifically and all that came along with that, but the interest rates only. I mean, if there was only one thing we could relive with COVID, it would be the interest rates and nothing else.
And you said 4. I immediately said millennial. What are you thinking?
Right?
But the expectation, and honestly, that's sort of what's happened over the last 3 years is, everybody would, well, I'm not buying a house till it gets to 3% or 2% again or whatever. And I think people have realized that's not going to happen.
Yeah, not any time in the foreseeable future.
No, there's no way it's happening in the near future. It's going to be like, I mean, I hate to say it, like 6% rates are normal.
Yeah.
Because actually, historically, they are normal.
I think to answer your question, like 5.875, something like that, 5.9. I think just optically speaking, if somebody gets a loan estimate with an interest rate that's got a 5 in front of it, that's going to be enticing to people, even if it's in the high 5s.
Yeah. As they say, a 5 handle definitely see some activity for sure.
Yeah, which begs the question that you hate to answer, but I'm going to ask it anyways. If the Fed does do 2 rate cuts this year at a quarter point each, do we see mortgage rates loosely follow and get into the 5s?
Yes, depending on the narrative that accompanies it.
Yeah.
So again, okay, September, we've got one in mid-September. So if Powell comes out and they drop the rate a quarter point, and everybody, champagne flowing from the heavens for 30 minutes until he gets up there and starts talking?
Yeah.
What's he going to say? If he says, hey, we see that the economy has really slowed down and we need to, as a result, we're going to drop the federal funds rate a quarter point and consider doing that again at the next meeting. Okay. Investors will let loose of the rates a little bit more than if he says, we're going to wait and see. And by the way, the tariffs are really screwing things up still.
Yeah. Wait and see is his favorite phrase.
Exactly. It's like, we're going to see what happens. We're going to watch the markets. We're going to watch the indicators,
It's almost like a 50-50 equation, right? It's like, one is the decision, and then that's 50% of it. And then the other 50% is what comes out of Powell's mouth 30 minutes later.
Well, and somewhere in between, he's not the only guy that opens his mouth. All the other Fed presidents do too.
Yeah.
Like across the country, they're giving speeches, going to luncheons, whatever. And they're doing that all the time. And so that news hits the news cycle. One of them says they totally disagree with Powell, or we never should cut again. We should just leave it the way it is and
increase rates.
Some people are like, oh, well, we need to drop rates, half a point, something like that. Oh, okay, well, they're kind of all over the place. And as those things come out, it messes with the market. If things, if we just say, hey, we're dropping a quarter point and we'll probably do it again next time, then yeah, I think we see some rate movement.
Yeah. I think it's really interesting to me to see that, to watch the percentages. Those are really fascinating when you share those with our team, which is the likelihood that we're going to have a rate cut, because it was in the 60s, shortly before the meeting, and then it dipped down a little bit into the 40s or 50s. And then after the meeting, it dipped down way into the 30s. Then the jobs revision comes out, boom, it's almost back up to 90. So it's interesting to follow that.
Yeah, the Chicago Mercantile Exchange is who provides, that information. And honestly, when I first started watching the charts, I didn't even notice at the bottom that it tracks it throughout, like, what was the percentage a week ago? What was it, this week? What was it 2 weeks ago? How about the beginning of the month? What was the expectation at that time?
Yeah.
And but it's really telling, and especially in a month like this month, right, where, you see Fed meeting, okay, great, they probably might change it. And then you see a job revision, whoops, we screwed up the numbers that we used to make that decision.
Yeah.
Oh, okay, now it's really likely they're going to drop.
And it's kind of like, isn't that your one job, right? Like, you kind of had one thing to do and you screwed it up royally.
Yeah, right. And of course, it's easy for us to say that. I don't know the ins and outs of what they do on a daily basis and how difficult that really is. But it seems it shouldn't be that far off for sure.
No, definitely not. Well, it's going to be really interesting to see what happens in September, see what news comes out before then and how that changes the probabilities. But as always, we're going to keep covering it.
Yeah, I think, Stephen, we should probably just wait and see.
There we go. I think that's a perfect place to end it.
Awesome.
Let's wait and see.
We'll wait and see.